Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. Roll top. Alright. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you guys buy it. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. So it's Tuesday, and I cannot get into my account. So here's what happened to me. I had built I had used a lot of disk space editing the last video, because it will create like proxy media that you can mess with in order to make the editing faster. So I usually do that, and that takes up a lot of space. This is like 50 gigabytes or something like that. So my disk was full, and I think that NinjaTrader didn't like that, because like I shut NinjaTrader down, and then it said like not enough disk space to do that. And then like the control center shut down, but not the rest of the application. So when I restarted NinjaTrader after that, everything had reset. Like my workspaces were still there, but like my NinjaTrader license and everything else had reset. So I needed to reset up my connections, and I can't remember all of the information. So I've contacted NinjaTrader to try and get access. I sent them an email late last night. They haven't responded yet. I'm assuming that they get to it when they come to the desk here. I bet you that they probably don't come to the desk until like 6:30. Is my bet. So yeah, that's where we're at. So you'll probably just have my face here for the first bit. Let's open things up. We do get let's see what kind of news we got going here. Let's see here. So we don't have any news at the bottom of the hour. We do have some bill auctions today still. We got Fed's barking in Bank of England's Governor Bailey speaking later. So that kind of gives us an interesting setup. Overnight, there's been some more weakness. And again, it seems driven, at least from reading the headlines, it sounds like it's driven primarily by concerns about COVID lockdown in Shanghai. Now, the thing is that they haven't said anything. It's just like they've locked down on smaller outbreaks before. And I think that that's what has everybody like super on edge. But it's a tough call for the treasuries, I think, because further shutdowns, the risks kind of skew towards more inflation, possibly, and continued supply disruptions. So, how do you sort that all out? That's basically what where we're going. So, I think we can just chill here, have a little chat, read Twitter, etc., while we wait on that. I'll put in here, just view all mail. Man, that sneeze, it came on fast and hard. JP Morgan FX index that covers emerging markets is down 47% over the last 10 years. That's insane. Because I remember the time when it was like there was, all of the emerging markets was the place to be. It was even a time when it was like we were bullish on Russia, right? ECB spokesperson says we can confirm there was an attempted cyber incident recently involving President Lagarde. ECB spokesperson says the incident was identified and halted quickly. No information was compromised. No. I was not on one of those websites, I promise. Oh, boy. Oh, man. That's one of the headlines right now. Wow. Oh, let's read this Guardian thing that Taleb is retweeting. I thought cash was trash. Or like, no, but that's always been here's the funny thing, Lambrecht, is that the term cash is king, as far as I understand it, came first. It wasn't until much later, really during this kind of like print infinite money kind of regime, that everybody started saying cash is trash. And now here we come back and the dollar's just real, it's causing all sorts of chaos everywhere. Gold continues. I mean, the thing that's the funniest is that you have an inflationary environment, but because of the strength in the dollar and the rising interest rates, the gold and silver just get absolutely trashed. I have to say, it's not like I don't understand what's going on. It's just that this whole thing that during a inflation panic crisis, the dollar is really high. That is, I never would have guessed that. There's no way in a million years that I would have said, oh man, you watch, one day there's going to be this economic situation where there's lots of inflation, but the dollar actually remains high. No way. Nobody would have guessed that, right? The whole world that we live in today is just silly. It's just that term, you can't make this stuff up. One of the things that I think is funny, they've been saying this about Joe Biden, because they hacked into Hunter Biden's iCloud account and pulled a bunch of stuff out of it that is very, very not. Listen, if this stuff had been pushed around more and investigated more when Biden was running for president, he probably wouldn't have made it as president. This is like stuff that would ruin you as president, and it's. Biden's performance overall has been pretty poor, and that alone probably disqualifies him from, being the Democrat nominee again. Can you imagine, like, there's been plenty of situations where, a president runs again and then he's defeated by the other party because he's not liked or whatever. But I can't think of a time when the president was doing so poorly that his party basically kicks him out, except for maybe LBJ, when he just told everybody, well, I'm not going to run again. Good decision, LBJ. But so the Hunter Biden thing is all happening, and everybody's like, you can't make this stuff up, and it's like, no. Like, actually, that's the funny thing, is that it's like the predictable thing. It's like if I was going to make something up about Hunter Biden, this is the sort of thing that I would make up, right? Normally with politicians, they try and throw you a curveball, right? They don't want to do something so obvious or like that some of the SPR release ended up going to China, right? They say you can't make that stuff up. No, that's exactly what I would make up when we're talking about Joe Biden. That's what's so funny about it, is that he's doing all of the dumb things that you would predict he would do. What? But then when it comes to the economy overall, you can't make this stuff up. Inflation high, dollar high. You can't make this. Nobody would have thought of that. No human. Somebody's going to go and find me this economist that, 2 years ago was predicting that there'd be high inflation and a high dollar. Ugh. But I say, no human would make that up. No human would think of that. You can't make this stuff up. Well, I'm sitting here wondering what I need to do about Ninja Trader, because you would think that they would have responded by now, right? Maybe I need to go to a website and I would get maybe if I log in. No. I did send it to brokerage support, right? Brokerage support at ninjatrader.com. Yeah. I just have to be patient, I guess. Man, so I've been getting notifications that my my Gmail inbox is getting low. Like, I remember when I first got Gmail, like, what, 15 years ago? I mean, it was like a brand new thing when I got it, right? And thinking, oh man, they give you so much, there's no way you'll ever fill that up. Well, except for that when you get sent hundreds of spam mail a day. You get hundreds of spam mail things a day. Okay, let's read this Guardian article. They couldn't even scream anymore. They were just sobbing. The amateur investors ruined by the crypto crash. Oh, this is going to be a fun article. Fueled by hype and hysteria, the market in Bitcoin and other cryptocurrencies went from an obscure niche to a $3 trillion industry. Then the house of cards collapsed. In the gloom of an 18th century drawing room at the private rehab clinic Castle Craig near Pebbles in the Scottish borders, Roy, a 29-year-old victim of the global cryptocurrency crash, tells me his story. It is a dazzling lesson. Now, so I take umbrage with this one. First, there are no victims. There are no victims. You knew what you were doing. We all told you to stop. You cannot claim victimhood. You made the decision. You're not a victim. You're just a loser. It's just like I can't come in here, take a trade in the 10-year treasury. It goes the wrong way. I blow my account and then say I'm a victim of the China lockdown. No. I knew what I was doing. I took the risk. And media are always sensationalizing. Nah, they want the sob story. But listen, here's what's happening, right? Is all of the people in the crypto sphere are trying to put on a big sob story in the hopes that somebody will bail them out, right? That's what you do. That's what society has taught them to do. That's what the banks did, right? But nobody's going to come and bail out the cryptocurrency market. Okay. It is a dazzling summer's day, but here the mood is somber. Roy shifts uncomfortably in his chair as he begins. It all started in February of 2021 with a radio advertisement for Dogecoin, a cryptocurrency promoted by Elon Musk, the founder of Tesla. Okay, so if you're hearing investments pushed on the radio, probably you don't want to get involved. Intrigued, Roy started Googling, eventually using his credit card to make an initial investment of $2,500 in a range of cryptocurrencies. The value of Roy's portfolio climbed to $8,000, then $100,000, then $525,000. Roy had entered the market during an adrenalized bull run, meaning an extended period of price growth. A combination of COVID stimulus packages, low interest rates, and unprecedented level of enthusiasm for cryptocurrency among furloughed workers meant the bull was careening out of sight. Well, I think it'd be very easy to come in, make $500,000 in the cryptocurrency market, think you're a genius, think that you've totally called it right, and the cryptocurrency is going to take over the world and just hold no matter what happens. Yeah, that's exactly what a normal person would do. They didn't know any better. So far, Roy is hey, at least you made and lost. I would give anything to be able to say that I had lost $500,000 trading. Roy started watching all his time, watching YouTube videos and speaking to other cryptocurrency enthusiasts in private groups and the messaging out to, oh man. So this is another one that drives me nuts, is primarily getting your investing information from YouTube. Probably not the best way to do it. Of course, here on this channel, you can learn a lot of valuable information about markets, right? But I don't ever come in and say, oh, here's the next big hot stock to get or the next big hot cryptocurrency to get, right? I know that kind of a recommendation, even if it was a good recommendation, doesn't really help, because if I stir up demand for something, that just means that you're all buying it when it's at its most popular, and therefore you are likely to lose money, right? You have to buy before it gets more popular, right? You have to buy in before the orders come, right? That's why you don't want to look for recommendations on individual stocks through YouTube. He has been treated for cocaine and alcohol addiction twice, but by 2021 he was sober and working as an addiction counselor, although he was on sick leave as a result of panic attacks brought on by childhood trauma. Oh yeah, no, this is bad. I see where this is going. He soon relapsed. By day, he checked his cryptocurrency wallets every 10 seconds. By night, he set alarms to go off on the hour. He began fantasizing about life free of financial constraints in which he would never have to work. Are you kidding me? If you had $500,000, you didn't take it out and put it in the stock market, you probably could have lived on that. Well, you wouldn't be able to live on that, but you'd be able to go a long time. You'd be able to go a long time on that. Then the cryptocurrency market collapsed. The price of Bitcoin fell from 42,000 in May 2021 to 23,000 by the end of June. It rallied to an all-time high. Blah, 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 blah. Since then, it has been in near continuous freefall. It felt like I had lost my life, says Roy, because I had invested everything in crypto. I had built every dream I had on there. So when it came crashing down, my whole life came crashing down. You only lost $2,500. Are you kidding me? Pounds. You only lost 2,500 pounds in net. Yeah, okay. Desperate, Roy made a string of bad bets. The value of his portfolio dwindled to 20,000, then 3,000. It got so out of control because I saw my chances to live a better life fading away. So sad. So I became really desperate and eventually just completely isolated. I didn't want to see anybody because I thought I was a failure. Well, should he feel bad? I don't know if he should necessarily feel bad about himself. I think that any normal person that doesn't really study markets would fall into the same trap. Especially you made $500,000 doing it, like, good grief. You live, you learn. This is why, listen, everybody's going to make this mistake in markets at some point, to be honest with you. Like most retail traders, when we're trading E-minis, the way that it happens is you're taking teeny tiny little wins all the time. And you don't understand the fat-tailed nature of your strategy, and then one day it just all falls apart, right? Everybody goes through it. Everybody goes through it one way or another. I remember when I first started streaming on this channel, I had like 3 months where I was just the hottest hand and I just couldn't lose. And I think that probably was a big part behind why the channel grew so fast. So, to over 1,000 subscribers so quickly. Because if I was under 1,000 subscribers, it would have been tough because then I wouldn't have been able to stream on all the other things that helped grow the channel. Although YouTube has fixed that since then. Most mornings he would wake up shaking from alcohol withdrawal, order booze online, and spend the day drinking and taking drugs. He developed stomach ulcers. I can't explain the pain. I would drink and puke and drink and puke and drink and hope to keep it in so the pain would go away. I felt like dying. Well, that's not really cryptocurrencies. Well, man. So like, here's the thing is if you have serious issues with self-control and addictions, trading's probably not for you. In my observation, because first of all, you don't want to be an impulsive decision maker. Yeah, he has problems other than crypto. You don't want to be a impulsive decision maker, and two, the same sort of chemical reactions that can create addiction and that people struggle with in addiction are at play in trading. When you do well, it gives you a hit of dopamine. It gives you those feel-good chemicals in your brain, and it's really quite strong and addictive. 100%. And one of the other things that you'll struggle with is if you're doing it the other way around. If you take, little risks here and here and here, and then eventually one of them pays off and you make a ton of money off of it, then like that's all your brain ever wants to do ever after that. You're just always chasing that big winner that you got. In May, jobless and broke Roy checked into Castle Craig, one of the only centers in the world that treats cryptocurrency addiction. He lost his job when he relapsed. His rehab fees are covered by medical insurance. That's no good. His cryptocurrency portfolio is now worth about $300. Man, now amid the incongruous grandeur of Scottish stately home he is attempting to rebuild his life, and when the quiet and the tormenting, and he's going to recover, and then he'll become, a cryptocurrency guru next cycle, right? Or do you think that he'll just give up on cryptocurrencies? Let's see. They gather. Oh, well, I think that's the end of his story. They gather on Telegram to let out howls of grief and a short, sharp shrieks of pain. Ee, yells a young woman. Wow, roars a man in a deep baritone. A third person wails like a baby. These are the victims of the cryptocurrency bloodbath. 3,315 of whom have assembled in a bear market screaming therapy group. Whoa, what? Wait, what? A bear market screaming therapy group to vent their anguish? I only had a few people lamenting and crying, says the group's founder, a 30-year-old cryptocurrency investor who only gives his first name, Guilio. I decided not to ban them. I felt bad. They weren't even able to scream anymore. They were just sobbing. Oh, you're not allowed to cry. You're only allowed to scream and yell. What? I can't even, man. I'm gonna keep. Can we keep reading this? That is so crazy. I need to go find. I need to go find this Discord now. Oh man. Oh my gosh. I need this. Okay. Let's find it. Where is it? Oh, it's a Telegram group. Man, I don't know if I really care about Telegram. Very normal behavior. Let's check our email. We got anything now? Ninja Trader. Do you know when their desk opens? If Ninja Trader's desk doesn't open until 7:30, that's kind of a problem. Like, I was kind of thinking about, I don't want to be on Ninja Trader brokerage anymore. I've been feeling that for a while. But this might be the straw that broke the camel's back, yeah. This eye is watering a little bit today for some reason. Being a little ADHD. All right. The cryptocurrency industry is in roiling waters. Scarcely a day seems to pass without a wave crashing across the sector. The roller coaster has turned and taken crypto holders on a downward spiral, says Susanna Streeter, an analyst at Hargreaves Lansdowne. Many people have been caused serious financial pain. Again, no victims. You knew what you were doing. Okay, so let me describe what happened with NinjaTrader again, okay? Because this one's kind of weird. It's not the first time that this has happened to me, per se. So I had been editing this weekend, and I created a lot of proxy media to edit with, and the proxy media is quite large and took up my disk. So I had like 50 gigabytes of proxy media on my machine, filled the disk up. So when I tried to close NinjaTrader down yesterday, it said, oh no, I can't do that. I can't save it, essentially. So I think that it like tried to save all of its settings and the disk didn't let it, and that like erased all of the settings or something like that. So I cleaned the disk up, start NinjaTrader up again, and it's like it had just been started up for the first time. So I had to re-input my license, I had to take it out of global simulation mode, and I had to re-enter connection details. And I don't have all the connection details anymore. Couldn't find, so I have to we have to reset my account or something like that. I don't know what we're gonna do, but like I tried what I thought the password was. Maybe it like generates a random password, and I just don't have that anymore. But so that's what we're waiting, is that we have to, NinjaTrader brokerage support has to wake up and reset my CQG connection or whatever. So that's why we can't get in. Isn't that dumb? I mean, I feel kind of dumb, but like, I'm a little, at first it was like, oh, it's all my fault. No problem. But now NinjaTrader's hasn't responded to my support query, I guess you could say. I sent an email to them. I haven't gotten a response back yet. Back up your stuff. Yeah, well, so here's the thing though, is I don't know where I don't think that any of that stuff gets backed up in a file. I don't think that any of that stuff gets backed up in a file. So, I don't know. Bless you. Yeah, I must be having an allergy fit, because that's the second hard sneeze I've had, and this eye is watering a bit more. So I think I got into something. Probably need to wash the sheets now, so it's time to wash the sheets, but that can't be it. I'm downstairs. Had the air filter running. I don't know. Yesterday I was having colon problems again. Just something that happens to me. I think it was this. I don't think that I was having a flare up. I think that it was just like I ate late. And when I eat late, it's like, the colon doesn't have as much food in it. So the inflammation kind of squeezes it. And then when the food comes into it, it doesn't feel very good. And that just inflames it more. So I did that because I was, oh man. Oh, this is the other thing that happened to me yesterday. We were going to watch the NASA image. Did you guys see this thing? Where is it? Or actually, let's find it on Reddit, because it'll be at the top of Reddit. Do you see the new NASA image? So they're all, it's going to go at 3:30. At 3:30, where we will have the new image And then an hour and 15 minutes later, Joe Biden comes out. So like the White House is always late on everything. And then I fell asleep. You know, they put the image out and I fell asleep. And like I fell asleep hard. So then I woke up feeling super groggy. And it was time for a workout. It was the beginning of a new workout cycle. So I didn't want to lose that and get started off on the wrong foot. So I worked out. I was so tired at the end of all of that. So tired on the end of all of that. Seth, do you look at the CD on more than one interest rate chart? I do. Yeah. So the thing is that cumulative delta has an interesting and inconsistent relationship with price, especially in treasuries. So what I would like to see is the asset that I'm trading moving up and cumulative delta moving up with it, and there be a high degree of autocorrelation. That is like, you know, the more of a straight line up it is, the better, essentially. Yep, there's more images coming during the NAS in an hour and 30. Is it really in an hour and 30 minutes? See, here's the image that they did. And this is actually taking a photo of an earlier. This is an image that Hubble took, and they've retaken it with this new telescope. So when it was Hubble, everything was red and it was very, very dark, and there was some of these galaxies that just weren't showing up at all. Like in the original image, there was this little blob, this little smear here. It was there, but they were like, well, we're not sure if that's like an aberration on the telescope or what the deal is with that. So now they've taken it with another telescope and they've taken a longer exposure, and you can see a lot of these, and they're all kind of centered around this big galaxy in the center, right? This big white dot right here. So what's happening is gravitational lensing. This galaxy is basically acting like a telescope to allow them to see galaxies even further away that you would be too difficult for you to collect light for otherwise. Pretty cool, huh? Right? I fell asleep during that. Oh man, I am being really ADHD because we just talked about cumulative delta and then I stopped talking about that and I started talking about this again. Okay, anyways, where's my pen? Okay, so what I want to see is the asset going up like this and cumulative delta matching it. Okay, but rarely is it so simple. In a good solid trend with a large meta order behind it, this is what you will see. But in the treasuries, there's spreads and everything, right? So what you might see is selling in the 5-year, buying in the 10, buying in the 30, something like that. So I kind of want to see all three of them because that helps me see what we might have going on with spreads, essentially. So I have a charts over here. Where's my... So when you look at my charts, right, this is 30, 10, and 5. So they're all next to each other. And then I also have these charts that are the spreads, right? So then I can see, okay, the spread is going this way. And I can see that there is buying in the 30 and selling in the 5. So that all kind of confirms what the spread is. So, and you need to realize that sort of a thing, because then you're going to come over here and you're going to say, there is selling in the 5-year. That must mean that we need to sell. But actually, no, they end up moving up. And the only reason they're selling over there is because they're flattening, right? So I think that it is, you don't have to look at the cumulative delta on more than one interest rate chart, but you do want to know which way the spread is going. This is all stuff that you can see on the DOMs. Is just, it's a little bit, you might not remember what's going on and stuff like that, right? But generally speaking, you'll see, they all moved up, but this one is higher than this one, right? Flattener. Pointed down means flattener. But when we're in a strong trend, I want to see them all moving up and all of them have cumulative delta in correlation, right? And something that you can see sometimes is like, maybe cumulative delta is actually flat or kind of all over the place, and we're moving up, and it's just because the sellers are pulling out of the way, or there's a correlated asset or things like that. And so that's why you'll see I'll often come in and I'll say, okay, I don't see any real strong drivers that makes me believe that I have an edge or that I can predict future volume. And then when I look at cumulative delta itself, it's all over the place. How am I supposed to make anything of that, right? Whereas when I can see autocorrelation in cumulative delta and price, then I know that there might be some persistent meta order out there driving it, right? And that's also another thing that I do with the S&P 500 just with prices. Here, this is R squared. The higher the value in R squared, the higher a degree of autocorrelation there is in the markets. Right? Trying to remember why I was even talking about the Hubble stuff, but it's maybe because I do still feel tired this morning. Like I slept hard and I kind of wake up a little tired. So maybe it's a good thing that I'm not able to actively trade today. Surprise, 2 days of stupid deals start now. Oh, no, I want an email from Ninja Trader. They're not going to come in until 7:30, aren't they? Have you tried aggregating the Actually, I have, but I did not find it as useful as you'd think, fortunately. I think that one of the issues that I see a lot of with indicators and stuff is that you basically end up summarizing the data so much that it becomes useless, right? So like, think about a moving average, for instance. A moving average is an attempt to remove noise from the data series, right? So that primarily, I think that the primary or at least initial motivation behind that was so that a human can interpret what the trend is more readily, right? But the longer your period is for a moving average, the slower it will be. So by the time you actually get a good signal, it's already gone. You've lost most of your profits. It's lagged. So then they've discovered all of these things to kind of try and adjust for that. So it's like you can get an indicator that's more responsive to current, more recent movements, so that it will give you a faster trigger, but still cut out a lot of noise. But when you do that, you end up like you'll get more false signals and things like that, right? So there's a certain point at which you've smoothed it out so much that there's this informational content inside of the teeny tiny little movements that are gone, right? And so then your indicator starts giving you bad signals, right? So it's kind of the same thing, is that like when I can't see the volume for all three of them, I think that one of the issues that we got is that there's the other side of that, which is that you get too much information that it's difficult for a human to actually analyze and interpret it, right? I think one of the advantages to our style of trading, to an informed trader, a speculative informed trader kind of approach, is that you know that there is a reason to be trading, right? There's something going on out in the market that suggests to you that future orders are going to be like this, are going to be buys or sells or whatever, and you can get ahead of them. And then, because you know that that's happening, you know exactly what you're looking for in the order flow, right? So those sorts of things don't necessarily screw you up. But if I didn't do that, if I was just only using the market data, could we maybe pull an edge out of that? Perhaps, but it would have to be a complicated system where we're looking at 3 price series and 3 cumulative delta series, and then even after that, probably level 2 on at least the instrument that I want to trade, or at least the 10-year, right? To sort out, and probably a model that takes into account autocorrelation and all of those things to sort out when it's a good buy or sell, right? I mean, and also probably correlated assets too. How does a human sort all of that out? It's hard. So, right. This is the real the ultimate conundrum in markets is that markets are very complicated, but it's very difficult for humans to make decisions off of such complicated information. So you have to find ways to simplify it, right? And that's the way that we do it is we are predicting future orders. When we can predict future orders, we know what the volume is supposed to look like, right? It's like if you're in the ocean and you are trying to analyze what all of the little waves are going to be, not the big waves, but even the teeny tiny little ripples on the surface. It's really hard to know what those are going to look like because it's random, right? It's not random. It's just there's so many inputs into it that it's too complicated for us to analyze, and ergo might as well be random. But if you were to splash your hand into the water, you would know exactly what it looks like, right? That's what we're doing. When we know when orders are going to come, what kind of impact they're going to have on the market. That's like somebody coming in with their hand and splashing the water. Instead of worrying about all the time, what are the ripples? And, oh, I saw a ripple like this. Does that mean that somebody's doing something or not? I can't make that conclusion unless I saw the person's hand, right? Or they told me that they're gonna splash me, right? Anyways. I probably do need to get some multivitamins too. I ran out of my multivitamin a week or so ago, and I'm probably coming to the point where I'm running out again. Okay, anyways. Oh, by the way, we have... Oh, no, I think we're good. Okay. Let's see here. Get to the good stuff in this article. What? In May, the stablecoin Terra Luna collapsed, prompting the Guardian's UK technology editor Alex Hearn to ask whether this was the industry's Lehman Brothers moment. It had been marketed as a safe bet due to the fact that it was pegged to the US dollar and it promised returns of up to 20%. Guys, if the asset that you are investing in has returns of 20%, it is not a safe bet, okay? Safe returns are like 1 to 2%, right? In line with inflation. 10% is kind of like the sweet spot. You get beyond that, you're talking about risky things that have a pretty high probability of going to zero at some point, right? Most stocks go to zero, okay? Carnage prompted further sell-offs. This month, the cryptocurrency lending platform Celsius Network halted withdrawals for its 1.7 million customers. Can you believe it's 1.7 million? A day later, Coinbase, one of the largest cryptocurrency exchanges, announced that it was sacking 18% of its workforce. Everywhere is panic and turmoil, and things look likely to get worse. The casualties range from ordinary retail investors to multi-millionaire whales and celebrities. In May, the British rapper KSI tweeted that he had lost almost $3 million in the Terra Luna crash. There had been at least 2 reported suicides in the UK and Taiwan. On the Reddit community for Terra Luna investors, users shared details of suicide hotlines. I'm surprised that they only have 2. Okay. Advocates will argue that this is but a cryptocurrency winter, as seen in 2013 and 2018. Prices will rebound, spring will turn to summer, the bear becomes the bull. They lampoon so-called paper hand investors, meaning those who abscond on the first sign of trouble, and urge each other to hodl and buy the dip. Others are less certain, will the frost ever thaw? It really is dramatic writing. But you know what? If you had Terra or Celsius or any of these other or Doge coins, having diamond hands is not the way to do it. If you have GameStop, having diamond hands is not the way to do it. If you own the S&P 500 index, or maybe Bitcoin, we'll see. That's the one that you hold forever. Everything else it's not the same thing. There are 8 stages of grief of crypto crash. Grief. Shock, I couldn't eat or sleep for 2 nights, says Ala Drinsky, a 34-year-old chef from London. I got sick from the stress. She has lost her life savings, a 6-figure sum, in the Celsius freeze. I can't imagine. Jeez. Guys, like I've saved really hard all my life in my 401k, and it stays in an S&P 500 index fund. And I just can't for the life of me imagine taking that money out and putting it into the cryptocurrency market. You have to be insane. I always thought the next project would bring me back up and I'd cash out before it crashed, says Roy. In the next cycle, I'm going to try. In the next cycle, I'm going to do it again. Part of him still believes this is possible. No, listen. It's not a winning game unless you know that the orders are coming. And then how do you know when to sell? Like when the orders have come. Right? But this whole game of like, I'll get in early and I'll get out before everybody. You're right. It's just a game of chicken, guys. The game of chicken has a long-term expectancy of 0. You keep playing chicken, you will die eventually. Alex Coe, a 41-year-old engineer and personal finance YouTuber from Glasgow, directs his towards Do Kwon, the South Korean entrepreneur who founded Luna/Terra. Coe says he lost enough to buy a 4-bedroom house in London. That's so bad. Kwon has been accused of fraud by 5 investors based in South Korea. He is being investigated there by Financial Crimes Unit and the U.S. by the Securities and Exchange Commission. Good. Euro and dollar are at parity. I wish I had more to say about it, but so here's the thing that I think is interesting about the current conundrum. So I saw somebody, this has been on my mind because I saw somebody on Facebook talking about this, and they're saying, like they print the dollar and they destroy your dollar, right? Smash it down. And then they push it up and they make the dollar strong. And this is the game that they play to squeeze the money out of you, right? But I really don't think that that's what's going on here. I think that almost all of the events that have occurred over the last year or so have kind of been, for the most part, out of people's hands, right? And they just kind of conspired in a way that was positive for the dollar. Kind of funny. Eurozone's going to get whacked. It is. Well, the question is, first of all, does the euro get significantly below the dollar? Like, do we get to like 0.8, for instance? Right? And then how does the Eurozone react? Because the debt over there in Europe don't look good, right? Especially in the periphery countries where they've basically got unsustainable levels of debt. And, there's all these people talking, or there has been people in the United States, saying very favorable things about Europe and their social programs and everything. But, that could all come crashing down. Or at the very least, it could be a difficult next decade for the Europeans, right? It's going to cost a lot more to import things. That's true. Although the euro will probably still be more expensive than the Chinese yuan, for instance. They'll still have access to cheap imports. Bargaining Valid, a 31-year-old from London, has used Twitter to plead for his money with Alex Mashinsky, the founder of Celsius. Vahid's life savings, more than $50,000 in cryptocurrency, is locked in his Celsius account. Vahid had planned to use the money to start a business or buy a house. For support, he spends his time on conference calls with other Celsius victims. I listen into one. I know anything short of getting your native token back is unacceptable, says one investor with desperation in his voice. But would you rather get back 10% or 20% or 34%? I'm hoping it's not a complete loss. Man. Depression. I thought I'd be able to retire early, says Co, but it's all gone down the drain. I've never cried so much in my life. I don't feel bad for you. I don't feel bad for you. You knew what you were doing. Like the fact that there's these people saying, I'll be able to do it next time. Next time around, I'll do it. They haven't learned their lesson, but they know that there's risk involved, and they just think that they're the one that's going to get away with it. Acceptance and hope. I worked my ass off during 16-hour days for 16 years to earn this money, says Derek Snee. This is hard-earned money. That's what hurts the most. I lost 6 years of hard work, but I am trying to stay positive. I'll make it back again. Good for you. I mean, listen, the stock market has been brutal, but it doesn't worry me. Vahid hasn't told anyone he has lost his life savings. I don't want people turning around to me saying, you should have taken your money out last year. He says, I ask him if he is embarrassed. Of course, he responds. Processing. I hope that I can show that I am willing to learn and accept my mistakes, says Co. If I rebound from this, perhaps I can be an inspiration to people elsewhere around the world, or my kids at least. So, the thing is that is you might feel bad about it, right? The thing that you should feel bad about is taking such excessive risk and not considering the risks, right? You shouldn't feel bad that you didn't get out at the right time or that you didn't see it coming, because the reality is that unless you're like me and you dedicate your whole life to this sort of stuff, the layperson does not understand enough to be able to predict when it's going to come out and to know when you should get out, right? This is a long story. Let's check our email again. It's still nothing. The industry's enthusiasts and skeptics agree on one thing. They saw this coming. Perhaps they didn't predict the precise contours of the crash or the fact that so many seemingly reputable companies would flame out. None of these ever seemed reputable to me at all. I cannot think of a single player in the cryptocurrency market that I trust. Not even Coinbase. But there was a sense that cryptocurrency bull would run out of road. The sector was too hot, too loaded with bad faith actors, scammers, credulous investors, and amateurs feigning expertise in Telegram groups, YouTube videos, and Twitter threads. When internet jokes such as PooCoin and Dogecoin surged in popularity, it ought to have been apparent that a market correction was coming. Such stupidity cannot be sustained for long. Was it surprising? Says Dr. Larissa Yaravaya, an associate professor of finance at the University of Southampton. I think it was quite predictable. The Bank of England has repeatedly told cryptocurrency investors to be prepared to lose all their money. Investors bought Bitcoin as a speculative punt in 2020 and 2021 because interest rates were low and many had spare cash due to lockdowns and economic stimulus packages. But when interest rates and inflation began to rise, fueled by COVID-affected supply chains and the war in Ukraine, institutional investors preferred to put their money into safer assets. The dollar. There is a fear factor rippling through financial markets about how out of control inflation is and whether central banks will be able to bring it under control, says Hargreaves Lansdowne Streeter. What kind of a name is Hargreaves Lansdowne Streeter? Is Streeter a common name in the UK? It's just like the most British name I have ever heard. Hargreaves, let's look this person up. Oh, it's Hargreaves Lansdowne is Streeter. Her name is Susanna Streeter. Okay. There we go. Here she is. Here she is on Twitter. Here she is on Twitter. She's got blonde hair. Very lovely. She looks British. She looks British. Oh, no, wait, you can't see. She looks British, doesn't she? Financial commenter. Oh, and she has a Substack. What did she tweet? Stuff about Boris Johnson's resignation. We'll follow her. Fun stuff. The mania around Bitcoin and other cryptocurrencies was fueled by a social media hype machine unprecedented in the history of financial markets. Investors touted new coins that were amassing huge returns, hung off the tweets of crypto influencers, and spoke in an impenetrable jargon. Demand for Bitcoin related purely to the level of interest in this new technology, and that interest was manipulated by companies that offered different cryptocurrencies and exchanges and startups. Yeravaya says all this happened on social media, meaning that investors didn't even know whether there was genuine interest in crypto or lots of Twitter bots encouraging people to buy. The system wasn't transparent. Got swept up in the social media frenzy. You fall into this dream, this la-la land of thinking, I'm going to make it. I was like a whole trend, pop culture. Now sitting back, I think we got brainwashed. Ka's wife has a master's degree in business administration, and she urged him to be cautious. She said, Alex, it sounds like a Ponzi scheme. This is social media marketing to rope you in, take your liquidity, and go. But he didn't listen. Oh my gosh. How can you? This is like, okay. This guy, you are stupid. I can't even. Okay. So, like, it's one thing to, like, not listen to experts, you know, like, not be informed and ignore, because that's one of the things that really strikes me about the cryptocurrency space, is that anybody that knows what they're talking about has been saying that there's problems with this and that it looks like a Ponzi scheme, et cetera, right? But your wife, okay, your wife is an expert on this sort of a thing, and you don't trust her to give you sound advice on such a thing, you ignore her? What an effing idiot. Okay? What an man. It was talking about, you know, I'm having this problem with my kids actually, but it's an interesting thing. Is like when you're in a fluid situation with like high risk and everything going on, right? The ability to act quickly is really necessary. So in the military, right, they say, do this thing, you do it, right? And why do you do it? You know that whoever is giving you that order is giving you that order because they believe it's in the best interest of the group. Of course, people make mistakes, and those mistakes could kill people, but you can do that knowing that they had the interests of the group in mind ultimately, right? And so you can trust those people. I'm telling my kids this, and they're like, okay, but what if they said to jump off a bridge? And I'm like, would I tell you to jump off a bridge unless there was a really good reason to do so? Right? Well, look, they're stepkids, so they don't have that kind of trust yet, right? Or maybe they never will. The younger ones would. The younger, Asher can't speak yet, but if I told him to do something like that, he would, I think, he'd 100% trust me. Okay. They're learning to trust me. Okay. I had one of the girls was working out with me yesterday, and the program called for box jumps. So, I had a stack of weights up there and like, okay, you got to jump up and down on this. She's like, I can't do it. I was like, yes, you can. Yes, it took her a while, but she figured out she could do it. So maybe she's starting to trust me. But, oh man, I can't imagine you're married to a person and then they're supposed to be an expert on this sort of a thing. You have a degree in business. You don't listen to them. What an idiot. I'm sorry, but what an idiot. But he didn't listen. They call it being an alpha, he says. You have to be on Twitter and follow the right people and be in the right Discord channel. You listen to the right chat rooms. It makes you feel so special. Well, there's something to be informed, but to being informed. But what these people were doing was not being informed. These people were creating a self-perpetuating cult to keep you in, to keep you from selling. They're doing the same thing in GameStop, man. There's a guy on TikTok that keeps posting about GameStop on my thing, and I like the guy, but I'm not interested in GameStop right now, man. I think that the trade is over, and I think that there are better things you can do with your money. And I'm kind of concerned that he is in the cult, At one point, says Ko, he convinced himself that Terra/Luna was such a great project that he was, quote, ready to sell my house, my car, and put everything in. Now he wouldn't even invest $10 in cryptocurrencies. It's like a drug, Ko says. You've been there, you've got high, and you're in rehab. I'm not going to go back in again. Well, good for you. He learned at least this guy learned his lesson. His greatest regret is that he encouraged others. Oh man, can you imagine? This is my greatest nightmare. This is why I don't give people advice on individual securities. Right? Is like, I mean, if you miss something, then fine. Right? If I tell you this looks like a Ponzi, I don't know if this is a good idea, and you miss it, then fine. But if I say this is a great investment opportunity and you should all buy it, and then you all get in it and you get fleeced, and I'm the one that convinced everybody to buy into it, nope, I'm not going to be that guy. I'm never going to be that guy. I don't want to be giving individual advice on securities. I could analyze securities, but I'm not going to give a buy or a sell rating. That makes sense? Hold on, I gotta blow my nose here. I could analyze securities, I could give you information, but I'm not going to be the one. I'm not going to try and convince somebody into an investment. That is a bad idea. That is a very bad idea, and the whole thought of doing that just makes me feel icky. His YouTube channel, which has 17,600, that's actually not that big of a channel, repeatedly championed the cryptocurrency. I do feel responsible, Ko says. I don't know what to do. How much I apologize. I haven't gotten much hate because I think I've been quite transparent in how much I've lost. I'm not saying people forgive, though. I don't forgive myself for it. You shouldn't. This guy seems like a smart guy. Open. Yeah, so we're having some problems with our account this morning and we're waiting on NinjaTrader support. I'm still not getting anything. I'm going to give them until 7:45 and then I'm going to send another email. Or I'm going to call. Can you call? Do they have the call? Do they have a phone line support? Contact support? Dun, 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 dun. Is there not just a number I could call? I would like to have a number. Well, let's turn on. We'll turn on my Bluetooth headset in case they call. And I'll fill out this form here. The support member will contact you shortly. But we've been occupying ourselves for the last hour just reading the story, so. Has the great cryptocurrency revolution simply evaporated? Nassim Nicholas Taleb was once open-minded about the potential of cryptocurrencies. The economics professor originated the theory of black swan, a hard-to-predict but seismic event such as the 2008 financial crash that is often rationalized after the fact with the benefit of hindsight. In 2018, Taleb wrote an essay describing Bitcoin as an excellent idea and a possible insurance policy against an Orwellian future. Last year, Taleb revised his position in a paper that described Bitcoin's value as zero. This is the first time we've seen a financial bubble coupled with religious cult-like behavior and an investment strategy not seen before in history, he says. I'm not so sure that that's actually the case. It's just, this is the first time we've seen a financial bubble coupled with social media. And so that religious cult-like behavior becomes more apparent, right? Many demur and Taleb could yet be proved wrong. A common defense of Bitcoin and other cryptocurrencies is that the underlying technology, blockchain, has functions not yet discovered. Taleb says, I would tell people who are still holding Bitcoin, ask your grandmother if the idea makes sense. And if it doesn't make sense to her, it doesn't make sense. Get out. Do something productive with your life. Thank you. Yes, please do something productive with your life. That's really it. You need to do something that provides value for society, guys. This is all about, we come in here and we're supposed to make things better for the next generation. And I don't think that Bitcoin does that. I really don't. I think it's a net negative for society. But few in the cryptocurrency world are heeding the esteemed professor's advice. Drixane plans to invest in cryptocurrency in the future despite her 6-figure loss, although she would steer clear of platforms such as Celsius. I firmly believe crypto is the future, agrees Vahid, but it's not a Ponzi scheme or a scam. Well, it does. So here's the thing, is that I think based on what has happened in this cycle, that if there is another Bitcoin bull cycle, that probably a larger portion of the population will want to try and keep it to just investing in Bitcoin, right? But I think that the issue is that in order for these people that are like the businesses in the cryptocurrency world, in order for them to make money, they have to bring money in the form of new investors, right? And how do they do that if everybody's already in Bitcoin, right? They have to convince people to invest in other things. Now, it could be on like second level layer solutions or something like that might be the next market, but there's still, those people are still going to hawk and try and convince people into it, right? Okay, my news squawk was telling me something but I can't share it with you. But there is something going on in the treasury. It was a block trade. He compares cryptocurrency to the early days of Amazon and Google when I point out that they were growing businesses. Yeah, that was like maybe in 2017, but now how can you say that? But Bitcoin replaces gold. Bitcoin is digital gold. No, it is not. Taleb is exasperated by this line of reasoning. If you buy gold and store it in your basement or wear it on your neck, there's no chance of that gold turning to lead over any foreseeable horizon, says Taleb. Metals don't need maintenance. Bitcoin requires continuous maintenance. But gold is not a productive asset either. How well has gold been doing for you in this market? Terrible. It may be the future. Economists view cryptocurrency boom of the early 2020 as a mass Dunning-Kruger event fueled by social media and facilitated by technology, an era in which amateurs took financial advice from fellow amateurs and bet the house on speculative investments. Admitting that you know nothing just tells you that you're lucky, says Roy, and my ego couldn't handle that. I didn't want to be lucky. I wanted to be someone who knew what they were doing. I'm smart, right? Tell me I'm smart, please. That's how it goes. The whole community reinforced themselves and each other. Well, here's the thing about that. I think that from the success that I've had, it has come from trying to be humble. To come in and say you need to be the informed trader, that's not necessarily a humble thing, because we're saying we're the ones that are informed, right? But what I've found is that if I come in every day and I'm informed, at least with a degree of which I can be informed as a retail trader, only gets you so far, right? Probably not enough to make a living off of it, or to make you a millionaire. To be a millionaire, I think you have to get lucky. I think that to become a millionaire from doing this, you have to be lucky. And so the more that you kind of cling to the, I'm smart, and the more that you accept that being smart only gets you so far, the sooner you can get on to being productive and happy with what we're doing here, right? Because if you spend the whole time, I tell you, if the whole time you're just chasing riches, you can be very unhappy because you're gonna constantly have setbacks, right? But when you accept that, you might be really, really smart, but that only gets you so far, and I'm just here to enjoy the market for what it is when you can actually become productive with it. And you know what? You might not make millions of dollars from day trading here, but it will seep into other parts of your life, right? You'll be able to make better financial decisions. You'll be able to understand what's going on. I was able to get into a house and so forth because of my knowledge of markets. Trading has nothing. It does. Like, being a profitable trader is not necessarily anything to do with luck, but to become a millionaire trader, you have to have gotten lucky somewhere along the line. Almost certainly. When Taleb published his 2021 paper, he received so much abuse that he had to lock his Twitter account. I could not believe how psychopathic Bitcoin people were, says Taleb. 100%, that is one of the big things, is like, these people are just nuts. Watching his tormentors have their portfolios wiped out has provoked a degree of Schadenfreude, he admits. But he has compassion for the inexperienced investors who got swept up in the hype. Lots of these kids lost everything they have, he says. You feel empathy for them. The scammers who urged others to invest in doomed projects while they were secretly cashing out, they must be punished. I agree. 100% agree. But it seems likely that just as in the 2008 financial crisis, the bad faith actors who exacerbated this meltdown will walk away unscathed. What's more, many of the investors who bought into the cryptocurrency boom did so to claw back security after a decade racked by recession and uncertainty. Ko was one of those. I was lucky to keep my job, but I was really angry at the suits at the bankers, at the high bonus people, he says. The whole space of crypto was about giving normal people the option to gain the upper edge in society financial. It was a beacon of hope. We could ride the next big thing, but that beacon of hope has been put out for now. The trust has been broken yet again, sitting here in decade number 2. The bankers have won again. Future generations may look back at this boom as a period of mania when money multiplied like bacteria and collective delusion gripped financial markets. It may seem unfathomable, but it shouldn't. After all, who doesn't want to be rich? Some names have been changed. So, here's the thing. I think, listen, you can all make your own meaning in life, but I say that the highest thing that you can do with your life is, after obtaining self-actualization yourself, to turn around and to help other people do it. That our goal is to make life for future generations better, to make their lives happier, to make their lives have more meaning, to make their lives be easier for them, and to allow them to achieve even greater heights than we have achieved. That is what it is all about. And we have created a system over thousands of years to help us accomplish this goal. This is the thing that separates us from other animals, is that our ability to pass knowledge down between generations. That's really what it's about. And yes, we have books and things like that, but I got to tell you, there is nothing that quite replaces a parent teaching a child about the world. Parent teaching a child about the world. Now, the world has kind of changed, right? More specifically to do with the advent of birth control and so forth. And that has kind of changed the whole kind of setup, because it used to be that sexual intimacy was only for marriage and for, was a part of a household that would be having children. And now there's a lot of people that don't have children, and there's lots of casual sex and things like that. And so a lot of people think that they have developed a new way of doing things. Okay, but the problem that I see is that their way of doing what they want to develop society into is more about what they think makes them feel happy and what they think validates them, and is not about what is going to make us as a society the most successful, what is going to help the next generation of people be the most successful, etc., etc. That doesn't mean that the current system is perfect and that we can't make improvements to it. But that's what we need to do, right? And there's this idea out there, I think, that the barriers to progress in our society is all coming from the rich people. This is what I see over and over and over again. Is that what, in order for us to have a better society, we have to take the people that are in power and take them out of power, and then we'll have an equitable society. It's total bullshit. It's total bullshit. It never works out that way, folks. This is communism, is what it is. I see it in like every kids TV show now. Like every kids TV show, the plot line is like this. There's a male hero. The male hero believes in the old system. He's proven to be a dunce, and then some young female or minority character comes in and becomes the new hero and changes things to a new paradigm, right? It is because what they're trying to push is socialism, in my opinion. I mean, I guess that's speculative on my part, but it seems pretty obvious. You see the message over and over and over and over again, right? But at the heart of this is this idea that what's holding us back is the current system and the people that are at the top of the current system clinging on to their power. But this, I think, ignores what has made our society successful, is the ability to pass down knowledge from generation to generation. And these things are complicated, okay? The reality is that I am not a star trader at a firm because I didn't know where it was going, what to do, right? That was not what my family's business was. I can turn around and I can teach that to my kids. And if my kids want to become star traders at a large firm and become millionaires, they have the opportunity to do that if they put the effort into it, right? There are some things in this world that require a lifetime of dedication to develop expertise in. And there's this large section of the population that, because they've never really developed expertise in something themselves, they don't realize this. They just think that it's all, you just read a couple of tutorials on the internet and then you can get it. And so this is how you end up with all of these people that are like, oh yes, I only just read like a few articles on Reddit, but I totally know what the Federal Reserve should do next, right? Like, come on, guys. I literally dedicate my whole life now since 2008 to learning finance and learning trading, and more recently since 2016 or so about interest rates. And monetary policy still confounds me oftentimes, right? I know a lot compared to the layperson, and I still kind of look around at this market sometimes and I'm just have no clue what's going on. And you know what? These people at the central banks that have been doing this for decades and decades and decades and went to university for this stuff and are the most knowledgeable people in the world on this subject, sometimes they don't know what is going on, right? But the whole point is that it requires a lifetime of expertise to do these things. And so where we should be focusing our efforts is how do we make our system better and prepare our children to be able to take on these roles and to be able to perform these roles more successfully than we have. Not to tear the whole system down and restart. The system is pretty darn good. It's taken thousands and thousands of years. And the more that I look at this and the older I get, the more I realize that, like, these are things that take a long time to figure out. These are things that take generations and generations of people to figure out and come across the right solution, because it's kind of hard to predict what the correct solution is right from the get-go. And every solution is probably going to have some downsides, right? So there's a lot of trial and error involved, right? And it really saddens me that what I continue to see in popular culture is a move away from that. Because seriously, if it's about preparing the next generation of people to be able to do this better than the current generation, okay? I tell you what, you gotta have multiple parents, right? You gotta have a full household that's teaching the children and guiding them in a certain direction when they're young, so that when they become teenagers, they can start to, learn the things that they're going to need to learn, and so that when they get into college, they're prepared to be able to go in that direction. That's one thing. And I'm becoming more and more about that because I feel like I've done a lot of the other things that I wanted to do, And that is now my thing in life, is how do we do that more effectively? Which I guess for me means, how do I teach my kids better, right? I think that one of the things is you got to get better at storytelling, because storytelling is the original method that we humans developed to be able to pass this knowledge along, right? Do you use settlements level? No. Okay, so AYOUB, oh man, I don't know how, AUB, I'm a Jade. I would be very skeptical about closing prices. There's a lot of manipulation around closing prices. And there's a lot of people that will say, if we close above X level, that means that's a good thing, and that means that we'll continue to see buying, or that could flip the momentum around or whatever. You got to realize that these settlements levels are very, very manipulated. And moreover, defining a strategy based on price closing above or below a certain thing, it introduces a lot of randomness into your strategy. Like, what price is random to some extent. Then the more that you rely on how far prices moved, or how far it's moved compared to a period in the past, the more randomness you're actually introducing into your strategy. I think that instead a better approach is to try and predict and track volume. So basically you say, I think that this kind of volume is going to come in, and based on the current market conditions, this is how it's going to affect things. So the way that you can kind of tell how sophisticated a trader is what they kind of have in terms of being able to predict volume and volatility, right? We come in and we're going to have a piece of news. How many orders are going to trade that? And based on the current liquidity, how far will it move based off of that? And when you get into really sophisticated algorithms, there's some pretty good models that help us predict how those will be. For us, we just kind of fill it out, but that does a pretty good job. If you can predict future orders, all about predicting future orders. And that's based, that has a basis, a much stronger basis in empirical research. Okay. All right. So, of course, still nothing from NinjaTrader. It's almost the top of the hour. I'm not sure what to do now. They filled out their form. I sent them an email. Now that doesn't help. See, the best that I can do, I think, is submit this form here, which I did. Pretty sure I did that already. So I don't know what else I can do here other than just kind of chill. Yeah, let's come back, check what's new on Twitter. It's already been open for 30 minutes. The ESs, and I'm still not. Yeah, that's disappointing. This does not look good for you, Ninja. This is feeling like we move sort of a thing. Well, overall, for Twitter itself is relatively quiet again today. So it's kind of looking like we may be... Well, looks like they are... Market is making some moves. Yeah, well, actually, I've been having problems with my NinjaTrader account. I ran out of disk space because I had too many optimized media for video editing on the thing, and it was taking up space, and that caused NinjaTrader to crash while I was trying to shut it down. That reset all of my NinjaTrader settings, and now I cannot find the connection details anymore. I don't have it, and I've contacted NinjaTrader support, but I haven't gotten any response. I sent them an email last night, and then I filled out a form 20 minutes ago, and I haven't gotten anybody to contact me yet. It's pretty bad, right? So yeah, that's why it's a full face stream day today, because there's nothing to see. And we were just reading a story about the cryptocurrency crash, and I was kind of laughing about that. I'm thinking now maybe I will fix my camera here a little bit, because I don't like it's a little bit too high and it's a little bent. That looks a little bit better to me. I spent a lot more time yesterday. I tell you what, the tutorials and stuff. Listen, what is it? The icon platform. Not too impressed with the platform itself. It's basically it's all web apps. It's kind of slow. And they don't have very good training materials for it too. And it's not very flexible. Like the tools that they do have aren't as flexible as I thought. One thing that they do have that I think is kind of nice is they have a seasonality calendar where you can pull up an asset and then it will show you like the last 10 years of that asset year by year, and then kind of like an average to try and determine seasonality. That's pretty good. Other things, and also you can like basically any number that you're seeing in there, you can basically click and drag it into Excel. So if you want to do stuff in Excel, that's really, really useful. But for what we want to do, I'm not so sure. Oh, but you know what? We can do one thing. I totally forgot about this. Dude. Well, that's okay, because I wanted to read that story. That was a good story. But I did get the data series exported. So yes, here we go. So we can do some R programming, I think. What I remember about Icon, it was used by FX guys. Bonds was exclusively Bloomberg. Not sure what it's like now. Yeah, well, just I've never used Bloomberg itself, but I've seen a lot of other people online using it. And from what I've seen from Bloomberg, it was like a way better platform. Like in terms of like responsiveness, like just from the okay, so one of the things that bothered me is like I'm going through, I'm opening stuff up and it wants to like save a file. And the little dialog box that opens up, I'm like, yep, I would recognize that one anywhere. That is what Java-based applications look like, because they can't use the same exact forms as native Windows, right? So it's written in Java. It's just not, it just doesn't seem like a very well optimized platform to me. So it has some good data in it. So one thing that I did discover in it that I was really excited about, frankly, was there was a thing that would show you bond deals. Like it would say, oh, here's a company, they're looking to offer some bonds, and like here's how far along they are in terms of making the deal to offer the bonds. So this would be a way that you could potentially predict future corporate bond offerings for supply. It's like, that's how they do it. But it's a lot more complicated. You know, actually following it is pretty darn complicated, right? Okay. So first thing is we're going to need to read Excel, and then where did I put it? I think I put it in, well, I don't know where we're at. Session, set working directory. Our projects. So I think that I put it under interest rates under there. Rates, just rates. Rates slash 2v10 day.csv. And then I think that we want to, let's see here. So if I open up this CSV file in Notepad, oh man, why do they give it such complicated freaking names? N2 and spread. Okay, let's run that. Hmm. Wait. Let's clear. Yes. Run. Can't establish that the input is either XLS or XLSX. That's curious. It is. That does mean that it is getting a file, because otherwise I would say cannot read. Yep. Day. So if we come back here. Oh, where did I put it? Back tests. Ew. Okay, let's just try opening it up in Excel, shall we? Cell. Save. Maybe now? Still can't seem to do that. File. Save as. An Excel workbook. So I'll do that dot XLSX. Try that. Da, 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 da. Okay, and yes, it gives the things. Okay, so now we should be able to come in and plot. Copy this one. Should be my data, $, date, my data, $, data, $, spread. Versus 10-year spread. X label, date, Y label, spread. I forget what the PCH bit does. Da, 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 da. Very, very good. I don't think that we want that. Okay, so why is it not a line plot? Is the first question. Huh. Hold on. So when I look at this one, is it this type? No. Okay. Our programming plots. Our plot function. I forget what the type n does not produce any points or lines. Oh, we want L. We want L. There we go. There we go. Oh, I swear there was a way to like open it up. There we go. That's right. Okay, so now we have a plot of the 2 and 10-year spread going all the way back to 1980. We were able to export the data. I'm liking it. I'm wondering, so there was this, I remember, so now that we got that working, now I'll close that. No. Now that we got that, I think that there's a model we can run on it, right? That will like split it out into constituent parts. fun. How are you? Okay. Decomposing a time series means separating it into its constituent components, which are often a trend component and a random component, and if the data is seasonal, a seasonal component. Recall that non-seasonal time series consist of a trend component and a random component. Decomposing the time series involves trying to separate the time series into these individual components. One way to do this is using some smoothing methods, such as a simple moving average. The SMA function can be used to smooth the data series using moving average. The SMA function takes a span argument, such as n order, to calculate the moving average of order 5. We set n equals 5. A seasonal time series, in addition to the trend and random components, also has a seasonal component. Decomposing a seasonal time series means separating the series into these components. In R, we can use the decompose function to estimate 3 components of the time series. Let's estimate the trend, seasonal, and random components of the New York deaths births data set. Okay, so comp, and we're going to store into it decompose my data $spread. I think. I don't think that'll actually work. What if I just do my data and then plot comp? Wait. So if I just run this, does that succeed? Error. The time series has no or less than 2 periods. So if I say spread, I think that it tries to find a seasonal component. So I don't think that that's the analysis that we want to do on it. Well, that was the thing that I really wanted to try. I can see that I misunderstood the application of it. We could still do something with decompose, but let's keep searching. Switch it back over to the camera here. Still nothing from Ninja, huh? I don't know what I'm gonna do. Are they awake? Should I send the email again? Should I don't know what to do. But 2.5 hour response time is not acceptable. If financial calendar fails tonight, tomorrow, can you look forward to a big gap down? Well, I think that there's a lot of risk to the equity markets tomorrow, because even if the number is too hot or too low, both of those scenarios could potentially result in S&P 500 selling off, right? Although it's less clear if inflation is lower than expected, if the S&P 500 rallies or sells off on that. Because they could rally because, hey, we're already past peak inflation, and that's good, because we won't have to keep interest rates so high. But it could also be, oh no, we are going into a recession, right? Let's do our time series analysis. Time series in R is used to see how an object behaves over a period of time. It can easily be done by the time series takes the data vector, and each data is connected with a timestamp value as given by the user. This function is mostly used to learn and forecast behavior of an asset in a business for a period of time. For example, sales analysis of a company, inventory analysis, population analysis, etc., etc. Okay. TS, data, start, and frequency. I've never heard of FMTO prop firm, but I'm just not a fan of prop firms. It sounds like a Forex thing. I wouldn't recommend trading Forex. Can I just do TS on it? Oh, it looks like it worked. It looks like that actually worked. So can I now run decompose on that? No less than 2 periods, blah, blah, blah. I might be able to say, forecast auto.arma. Oh, and I have a library required. I don't know if this will work. Yep, I don't have that package downloaded. We are trying to analyze the 2 and 10-year spread using R. But now that we have the data in there and everything, I'm not 100% sure which way I want to take it. Why not FX? So the problem with FX is that you can never put in a limit order, essentially, right? You're trading against the broker. So it's really not a fair game. Furthermore, our ability to find information that would predict a currency movement is far, far less than we have to be able to predict treasuries and stocks. There's just too much inside information out there about governments that we don't have. And generally overall, though, we're not getting data today because I'm having problems with my NinjaTrader account, and NinjaTrader has not responded to my support requests. Perhaps I put the requests in wrong, but I'm not getting anything. I'm not getting anything. Haven't tried to call me or anything. Analyze, well, I think that we want to find like an optimal turning point sort of a thing. I don't know. There is some mean reversion behavior in the 2 and 10-year spread that I think that we can take advantage of. So so they're using a library called Forecast. I wonder if we got analyze yield curve R programming. Oh, there's a YouTube video with some stuff. What is quant mod package? Quantitative financial modeling framework. Specify, build, trade, and analyze quantitative financial trading strategies. Add Bollinger Bands. Add a technical indicator. Flag a time series. Bunch of technical analysis nonsense. Rate of change. Maybe decent. Okay, well, that's interesting. You asked broker. Well, it was a different group that I emailed, but you're right. I don't know, man. Like I gotta be. I'm sitting here like it's been 2.5 hours. I probably did something wrong, right? But they're not responding to the request. That's like, why should I continue to use them? Don't know. Don't know what to do. I got a couple of things here that are like showing me how to grab data and plot it, for instance. Showing a yield curves. But I want to know what kind of time series analysis do I need to try and do on it. What's this? Hold on, I heard something about TikTok. No, not seeing it on Twitter yet. Are you working on another spread bot? Kind of. I don't think that it will be a bot. It will kind of be more of a discretionary strategy, but I am trying to discover what the statistical anomalies in spreads say we can take advantage of are. And I'm not sure where to go from here. I wanted to try and decompose the time series, but it's telling me I can't do it on this. I think I need to read more. Need to do some more reading. Seasonal adjusting. Exponential smoothing to make forecasts. ARMA models. If you want to make prediction intervals for forecasts made using exponential smoothing methods, the prediction intervals require that the forecast errors are uncorrelated. Blah, blah, blah. Oh, autoregressive integrated moving average models include an explicit statistical model. So I thought, okay, well, let's do this. Okay, we can do this bit right here. Tools, install packages, forecast, install. Oh, I mean like if we're just looking at a chart of the 2 and 10 year spread, is there statistical anomalies that we can pull out of just that? We're trying to find things that may in the spread itself, situations where that spread is likely to come back to a mean of some sort. Okay, now it should take that. Okay. So you should be able to forecast now with this. Oh, it's not a univariate time series. Never mind. They explained that, right? What is... No, there is. Okay, so the research that we were reading the other day suggested that there was some mean reversion behavior in the spreads, right? Below zero equals crisis. No, it doesn't. I don't think it works that way. Like, look, back in the 80s, I mean, we don't have this. I wish this went back to the 50s, right? We were below it for quite some time in the 50s, right? And why isn't it not? Why is my pen not working? Yeah, it won't let me draw over it, but you get the picture. It was below it for quite some time, and it went all the way to -2. But there is mean reversion behavior to it. Let's see here. Our time series mean reversion. Basics of statistical mean reversion testing. We've discussed algorithmic trading strategy, identification, successful backtesting, blah, 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 blah. Cool. Mean reversion. This process refers to a time series that displays the tendency to revert to its historical mean value. Mathematically, such a continuous time series is referred to as an Ornstein-Uhlenbeck process. This is a contrast to a random walk Brownian motion, which has no memory of where it has been at each particular instance in time. By the way, our kids do not follow Brownian motion. They have a long memory. In this article, we're going to outline the statistical tests necessary to identify mean reversion. In particular, we will study the concept of stationarity and how to test for it. A continuous mean reverting. This is what I'm looking for right here. This sounds like what I'm looking for so far, because I'm hearing Ornstein-Uhlenbeck is exactly the term for mean reversion that I'm expecting. I'm seeing math equations. The question is this going to be based on a single time series or multiple time series? A continuous mean reverting time series can be represented by the stochastic Bayesian equation, where theta is the rate of reversion to the mean. And I forget what that symbol means, is the mean value of the process, and this is the variance of the process, and WFT is a Wiener process or Brownian motion. Oh, okay, this is the Brownian motion that's added onto it. In a discrete setting, the equation states that the change of the price series in the next time period is proportional to the difference between the mean price and the current price with the addition of Gaussian noise. This property motivates the augmented Dickey-Fuller test. Mathematically, the ADF is based on the idea of testing for the presence of a unit root in an autoregressive time series sample. It makes use of the fact that if a price series possesses mean reversion, then the next price level will be proportional to the current price level. A linear lag model of order P is used for the time series. What do I think about the euro and the dollar being the same? Well, it's really interesting. Of course, I think that it was just kind of happenstance that it came here. I'm concerned about the euro falling more, like maybe to 0.8. And I have concerns for the European economy dealing with their currency being lower. It's kind of one of those things that could feed back on itself, right? And just exacerbate the issue even more. So. No, I don't want Python code. I want okay, augmented Digger Volley. Dickie, did I call it Dickie Foley? Dickie Fuller. T-Series library. I forget, do we use balance for? Maybe we use both. Yeah, okay. Library T-Series and then adf.test my data. Okay. adf.test my data spread. NES, not, so that means there are some that don't have a value, I believe. I think that I need to do it like my data. Okay, now try that. Dickie Fuller, negative 1.4858. Lag order equals 10. P-value equals 0.796. Alternative hypothesis stationary. Well, so the bots that I had, basically the conclusion that I had come to was that I couldn't really do it with the tools that I had. I needed to develop my own things up a little bit more. So there are some bits that are kind of built into my indicators that should do it, and I haven't really had the time to really test into them. If my NinjaTrader data was working, we could maybe be doing that right now. But in particular, I do not have very much confidence in like my indicators working correctly on historical bid-ask data, essentially. So doing tick replay, it doesn't seem to be very realistic to real life, essentially. So I don't think that any of the backtesting that I'd done previously was that useful, even though there was some evidence that the indicators were kind of effective. So I kind of need to get those going and like collect more data and run some analysis on it. And this sort of thing is like a really useful sort of a bit, is like coming in and doing these statistical tests and running machine algorithms on data and stuff like that to pull something out of it, right? Tools are lacking, yeah. And I've even come into this thing because I really want to make a robot that will try and bring the spreads in on the micros, but with my assistance of some sort. But the way that NinjaTrader works, I can't really test it because it automatically assumes that I get filled every time. So I can't actually test, because what I want to do is I want to see it like, okay, my little shadow sim order moves around with their orders and stuff like that. But I can't test it because of the way that NinjaTrader works, right? So I don't know what to do about that. And like I made a mess posted. Actually, let's go back and look at what they said with that. Yeah, so they're like, thank you for your post. This doesn't work. And it's like, well, you could obviously change it, and this is how. They didn't respond. Not too impressed with them right at the moment. Okay, here's how to interpret the most important values in the output test statistic. Mine is negative 1.48. P-value 0.49. Since the p-value is not less than 0.05, we failed to reject the null hypothesis. Mine is 0.79. So I think that the p-value means this means the time series is non-stationary. In other words, it has some time-dependent structure and does not have constant variance over time. But I think that that's what we would expect to see, is that like this right here is not stationary. But if you take like a moving average of some sort and compare that to it, then it is. Right? But it worked on it, so that's a good first step. Hurst exponent. The idea behind a Hurst exponent calculation is that we can use the variance of a log price series to assess the rate of diffusive behavior. Key insight is that if any autocorrelations exist, i.e. any sequential price movements possess non-zero correlation, then the above relationship is not valid. Instead, it can be modified to include. Okay. R Hurst exponent. These are all things that I've done stuff with before, but not necessarily in R. Smallest box size. Wait, what? Is that just a function? I'm going to guess, but no, but. Something that's interesting about R is that you'll get like multiple ways of doing it. I use the fractal dim package available on CRAN to calculate fractal dimension. Oh. Matogram, what is that? Matogram R. Let's try adding it. Where do we get it? Tools, install packages. That's right. Fractal dim install. Okay. And then, what was it called again? Matogram. Matogram of my data. Maybe. Probably not. Worth a try. Could not find function. What? Stationarity in market is usually false positive. Yeah, I didn't expect it to be I mean, it is kind of stationary, but I think that it wants to say like over the long run it's stationary. It's not, right? It doesn't mean revert back to it. It's there is some time component in here that's causing these swings, right? But I think that if I looked at a moving average compared to that, it seems like it's really hard for it to get too far away from a moving average, but it does kind of goes through some periods. There's some periods where it trends really strongly, and then there's some periods where it's quite hairy, right? But I think that to find the mean reversionness in it, I have to go to a different, like, oh, okay, so let's try it like this. Let's try something else here real quick. Date and oops. To spread. Save as an XLS workbook. Okay. My data 2. At the very least, this one should be a little bit different, right? No. It's not. I don't know. Wait, 5.8. I ordered p-value 0.76. Oh no, wait. I know. I thought so. 5 min. Let's try that again. There we go. So on that one, we got a much smaller p-value, right? So kind of suggesting that on the short term, it is a little bit more mean reverting here. We'll print it. My data 2. My data 2. Run this one. So there's a lot of omitted data for some reason in that one, but there is a lot of mean reversion. There's a lot of randomness in it, basically. Like it comes away from it, and then it comes back to it really quick. You know, it comes away, it comes back. Instead of trending up and then down, and then, right? Which is what we're looking for, is just how do we statistically, what's the correct way to statistically express that? Let's come back here. Move this over here so I can kind of check on. Oh, okay. I got a response. When was that? How late am I? Okay, I've only missed it by 10 minutes. There we go. No, don't do that. Does not like me. Invalid user or password. Maybe it takes some time to take effect. I'll wait 30 minutes. But it's time for me to get going, guys. So that sucks. It sucks that I go the whole session without access. Well, I will see you tomorrow. Don't forget to don't miss CPI, right? Anyways, in the meantime, stay profitable, friends.